We are now well into April, which means we are in the spring market for real estate, which is typically the busiest time of year. And this year is no different. However, there are a few things that aren't exactly matching up with what happens historically. In general, we see the largest amount of listings come to market in the spring, but we also typically see a large amount of buyers as well. And this is due to the fact that there's more to choose from. But along with that, it also brings more competition. However, the last couple of years have been anything but normal, so will this year be any different? Some people are saying that we're back to a quote-unquote normal spring market, while others are saying we're back to what it was in 2021, because we are starting to see offer presentation dates come back, multiple offers, and subject-free offers. However, with the introduction of the 3-day rescission period at the beginning of this year, there's not really a true subject-free offer anymore, but I digress. For those of you who don't know, my name's Alex Dunbar, and I'm a local realtor in the Surrey and Langley areas, and I make weekly videos about everything pertaining to the BC and Canadian real estate markets, as well as showcasing community tours across the Lower Mainland. So if that's something you're interested in seeing more of, I suggest you consider subscribing to my channel. And with that, let's dive right into the stats this month. So we'll start it off with a quick look into the stats package for March of 2023. At 1,550 property sales posted on the Fraser Valley Real Estate Board's MLS services, this was 72.6% higher than the sales recorded last month, although those were quite low, although 39.9% lower than a year ago and nearly 25% below the 10-year average. This is the more telling number, as even though numbers are up, it's trending in the right direction, they are still quite low. It marks the first time since August that monthly sales exceeded 1,000. Now, keep this in mind as we go through this video, because I'm going to point out a couple of things that even though we are trending in the right direction with some things, there are others, such as the total level of inventory, that is causing a bit of an issue. So just quickly, looking at single family detached homes, 1.39 million for the benchmark. Townhomes, 794 benchmark, and apartments, 521. And then taking a quick peek, we can see that detached homes were on the market for 30 days on average, apartments 29, and townhomes at 26. So still a reasonable amount of time on the market. However, these numbers are always pulled up by some of the, let's call it, less than impressive inventory, because the stuff that is priced well, shows well, is moving quickly. Now moving on, let's take a quick look at the overall benchmark price for all property types. We can see that in January, this was kind of the bottom per se. Again, keep in mind the benchmark prices typically trail behind at 942,000. We've seen a slight uptick for the previous 2 months. Now, if we actually look at the average sales prices, this will show January. Again, similar, yet it shows a little bit more of an uptick. But when we start going into individual property types, that's where it gets interesting. So we'll go back to benchmark prices. For detached homes, we see January, so it follows a similar trend and up around $30,000 here. However, again, benchmark is always delayed, because if we look at average sales price, which is a lot more accurate in the short term, again, it has its issues as well, but over a short-term basis, I believe it's a lot more accurate. Benchmark shows better for longer-term trends. We can see that November was actually, quote-unquote, the bottom of the market, and that prices since then have been up 1, 2, 3, 4 months in a row, up around $140,000 roughly. Now, let's do the same thing for townhomes. They were in January, had a slight uptick, only around $20,000 at this point. But if we take a look at the average sales price, December pushes 1 month further back, and then we can see about a $70,000 increase in prices. And I can say this is definitely the case at the ground level. It's more so than what it shows in benchmark. And again, always delayed. You're not going to see the full extent until 1 or 2 months later on. And apartments, very similar in that sense. Now we're looking at average price first. So 496,000 at the bottom in December, up for the following 3 months around $30,000. But looking at the benchmark prices, it was actually in January and shows a slightly less substantial uptick in prices. But the more important thing that I want you to look into here is the number of sales, number of new listings, and number of active listings. But before we go there, I want to take a quick dive into the Surrey and Langley markets. So first of all, looking at the average prices, we can see that both the detached markets hit somewhat of a bottom back in November, and prices are up now in Surrey at just under 1.6 and Langley $1.535 million. Taking a look at townhomes, we can see that their bottom was closer to December and now are both up at Surrey at $846,000 and Langley at $821,000. And then lastly, for apartments, once again, we can see that it appears in Surrey, it was actually in December was the bottom, but Langley delayed for one more month. I mean, they're pretty close here, off by 1,000. And now current prices are at $535,000 for Surrey and $559,000 for Langley. So heading back over to the Fraser Valley Real Estate Board, I want to show you what the main driver behind the prices right now is. So if we're taking a look at sales for all property types, we can see that we've been on a constant and steady uptrend since January. As mentioned, the first month that we've broken 1,000 sales since back in July or August of the previous year. So sales are on the uptrend. However, so are active listings, which we typically see. As we can see, almost year over year, listings build up until April, May. Listings build up until April, May. 2020 was an anomaly year, so it doesn't really count, but listings build up until April, May. Listings build. And then this year, they're continuing to build. However, the issue here is that active listings are actually on the decline. Typically, we can see from previous years that the listings would build with the new listings, but because the sales activity is up so much higher than previous months, even though on a larger scale there's not a ton of sales going on, just in comparison to how many new listings are hitting the market, it's actually pushing inventory lower. Now, looking at previous years, we need to be around this 6,000 listing level in order to be in any sort of a balanced or potentially buyer's market. When we get up higher, this is generally where we're actually entering a buyer's market. Now, there are other factors. However, supply and demand are going to be the two primary driving factors. Now, paired with the low levels of inventory, we've also had the Bank of Canada put a conditional pause on hiking interest rates. And not only that, with the collapse of a couple large banks in the States, this has caused bond yields to drop, which in turn has also caused fixed rates to come down as well. Along with that, economists are now predicting potentially 2 rate decreases before the end of the year, which was a very different story just a few weeks ago. So because of this, there's been a very strong and positive sentiment re-enter the market as there's less volatility and people are less concerned about where interest rates are potentially going. Because the major concern over the past year and a half or so was, number one, the fact that interest rates were rising by the fastest and largest amount that they have in over 20 years. So for those who already own properties, if they had a variable rate mortgage, this put significant financial strain on them. And for those that may have had a fixed rate mortgage, obviously when that came up for renewal, this was something they had to think about. And on top of that, anybody who was already in the market and trying to make a move, whether that be an upsize, whether that be out of the city or province, this would also impact them as well, because it significantly decreased their buying power as well as increased their monthly mortgage payments. So because of that, many people held off and have been on the sidelines. But with this newfound confidence, or at least the lack of uncertainty, many of these people have rushed back in. But the question is this just because it's the spring market and this is when most of the activity occurs, and on an annual basis, typically we do see a slight increase in prices? Or is this going to be sustained for a longer period of time and the market is back on fire and going to take off once again like it did back in 2021? Well, we're just going to have to see how things play out over the next number of months. In my opinion, the two main driving factors will continue to be how much new inventory we see come to the market and what the Bank of Canada does with their rate announcements. Because if we don't see an increase in the level of inventory and we see the Bank of Canada potentially even start to decrease rates before the end of the year, I have a very difficult time seeing prices not go up. Now, I don't personally think we're going to see any sort of major increase in prices like we did a few years ago. And the main reason being is that borrowing is just still too expensive. People are getting variable mortgages in the mid 1%. Personally, I even got a variable rate mortgage at 1.55%. And I can tell you now that that rate is up by 4.25%, that's a significantly greater cost. And if I was to go into the bank today with the same level of income and everything else in my previous situation, it would be tougher for me to borrow money in the sense that I wouldn't be able to borrow as much. So if interest rates do remain at this elevated state, or at least close to where they are now, I really don't think prices can get that far out of control. But if all those factors kind of line up, and even if we were to add in some sort of a black swan event, who knows what happens. But at the end of the day, these are just my predictions based on the data that I have. I'd love to hear what you have to say. Am I right? Am I wrong? Where are things going next? I always try to take a level-headed approach and not get too far on the bullish or bearish side and just go based off of what the data says. And of course, I do have to take into account what's happening at ground level because that's not going to show up in the statistics. And I've already been in several multiple offer situations this year, especially in the detached market. And on that note, detached prices are rising at a faster pace than the rest of things, and typically that's the leading indicator. Because after that, we then see attached properties, specifically townhomes and then condos, follow behind. And generally, they don't increase or decrease by the same extent. So in a falling market, we see a compression, and in a rising market, we see detached homes start to get out of reach again. So if you do have an opportunity to buy a detached home and you can afford it, I would suggest you do so in the near future because it's only going to continue to get more difficult over time. And personally, where I'm seeing the deals right now are in Abbotsford, Maple Ridge, and Mission, as well as Chilliwack, but I was just referring to cities that are in the Fraser Valley Real Estate Board, whereas Chilliwack actually has its own. But essentially, all these areas saw the greatest declines in prices over the past year, and they haven't quite caught back up. I'm not seeing the same level of activity in these markets either, whereas you go to Surrey, Langley, Vancouver, anywhere else, and this is where you're generally seeing the multiple offers and the increasing prices. So how long is this opportunity going to last? It's hard to say, but I wouldn't wait around. So hopefully you got some value out of today's video. If you did, all I ask is that you hit that thumbs up button, and before you leave, head over to my channel and check out another video, and we'll see you in the next one.